All right, everyone. So today I'm going to be explaining left-hand side and right-hand side. We're focusing more on the left-hand side and a specific behavior and why it's so important to see the market from this perspective. All right, but first thing is you have to understand, I'm sure you've seen this before. Right? So I'm sure you've seen that, right? And basically what I'm going to focus on comparing is maybe this piece of the price action to say this piece of the price action. All right? So let's just pretend that they're candles. So they just pretend it's a candle. All right, now that you know that these are candles, let's just say candles or waves, all right, whatever it is, it could be waves as well, all right, or columns and point and figure or whatever. So let's say here, in this movement here, is this movement easier to do than this? All right, now in hindsight, we're going to put it in hindsight so it makes sense. All right, then I'll show you the market live. But this right here, let's say this required 100 or 1,000 contracts. And say this require 1,300 contracts. Now we're going to do this in the context of this cycle. Why? If I was to ask you which movement was more difficult or which movement has more ease of movement, chances are you'd say that this here is easier to do. It's easier to move the market, right? Why? Because this price is low. Price is low. A price is low, and up here price is higher. So what does that mean? So it's more difficult to move higher. When price is low, it's easier to move. All right? I mean, you could say it in different ways, like price is low, so there's more demand. You could say here that, price is high, so it's harder. But bottom line here that I'm really trying to express is as price is going up, it takes more effort. It takes more effort. As price is low, as price is getting higher, it had more volume because it takes more effort. And as it enters the distribution, it turns. So you can see this signature as price is moving up, that it is harder to move up because the price is already higher up, higher up, higher up, and it takes more volume. And that is when, over here on the left hand side, and sometimes and usually in the base there's going to be effort. See that little bar here required 1,000, or let's say 1,200, something like that. Why? Because the market is turning at this price. As you go towards that price, it's going to be effort. All right, so this is a very important concept, and this is why you must understand volume. Believe me, you are really shooting in your. You probably heard this. Oh, this idea. A lot of in the forex they might say this. They hear price is king, or just price action. Is what you need to know, right? That's what a lot of stuff on YouTube. They're really, this belief here, price is king and price is action. All that matters is price action. You're doing yourself a disservice. You're doing yourself a major, major disservice. Because volume, it helps with identifying support resistance. It helps with identifying effort. It helps with so much. I mean, that's the whole reason to trade the futures market, to be frank. But I mean, there's a lot of skill that's required and all this and that. I'm not going to get into that. But, having the right knowledge about volume is, in my opinion, it's critical. I mean, I have no idea how the fuck to trade without volume. It would be really challenging. Volume is for trading. All right. So I'll give an example now. Here's just one simple example. Right here in the base. This base went 75, 25, 83. 83 is like more than 3 times bigger than 26. Look what happened. What about this turning point here? 135. Look what happened. Boom. Break. Because they couldn't go up. Here again, in the market. Right here, 89, right? Boom. What happened? Down, down, down. It's clearly showing you the importance of volume and the importance of effort, reward. Right now, I'm not saying that it's just look for high volume and small price range. There's other factors that you have to use, but it is a critical behavior. And also, as the market moves up, right? Like this here is marking up. What do you have? Effort, and then it pulls back, or it change trend. Same thing up here, same thing down here. All right. So this is why I'm explaining that from the Wyckoff to all the Wyckoff traders. So this channel is really for the Wyckoff traders. To fill in the gaps of that education, the Wyckoff style education. You want to understand that in the price cycle, we always do things in the price cycle. All right, so it's always in the price cycle because what waves, that's what all of this stuff is. It's just that's how supply and demand works. You have up wave, then down wave, then up wave, then down wave sequentially. And when you have these waves, you want to see within those waves what is going on in terms of the price volume interaction. And one very important thing to pay attention to, which you'll see again and again, is effort. Meaning before the turn, right? Before or on the turn, there is very likely to be effort. Because here demand is greater than supply. Not there it goes. Messed up a little bit here. Demand is greater than supply. But here, supply is greater than, one second. Supply is greater than demand. Right? Here, supply is greater than demand. What is going on in the middle? If here it's marking up because demand is greater than supply, and during markdown, supply is greater than demand, so it's marking down, it's going down because supply is greater than demand. What do you think is happening? In that middle towards the turn from demand being greater than supply and supply being greater than demand, here, what don't you think there's something happening? Do you think this is magically goes from demand being greater than supply to supply being greater than demand? Obviously not. You have distribution in the middle. So as the market is going up, as the demand is greater than supply relationship breaks down towards supply being greater than demand, there is a change. There are clues and elements of change, and one major one is effort. It is distributive in nature. Anyway, I'm done. Look it up. You could put this on your chart and start reading prices as they go to important levels, looking for efforts. Again, as price goes to important levels, look for effort. And get ready for the turn. Take care. Bye.